And we're going to talk about news as well because there were a few news out there that I do want to cover, specifically with companies that that are overseas. And one of them that I really would like to own one day. I do love their IPs, absolutely love their IPs. But yeah, with me, I have, of course, my co-host.
Good evening, everybody.
So, how was your day today, the lull day today when it came to the markets?
I didn't trade the markets, and well, I had that trade last night that I got out of, then got back in later. But honestly, I love how it just went right to my stop loss, then went right to my target. So I'm like, thanks, market. So I was down like $27. I threw a position like as we were kind of just talking, two contracts on, um, just because the market was pretty like it's kind of basing out around here, and it had a pretty sharp move to the downside. So I was like, okay, it's in an area that I always buy, like from the indicators perspective.
Okay.
And it's like chopping around. So I'm like, even if I don't get the best entry, I'm still pretty happy with the position.
Okay.
And then I got my two targets set, so I'm happy.
All right. All right. Yeah, I mean, I'm literally just waiting for tomorrow. I don't know. We'll see what happens. There's just a lot of stuff currently just in lull, right? We're just in a gray area. So it is what it is, right? It is what it is. But of course, guys, we're going to talk about mainly taxes today and of course some news. But before we get started, always have to do this, and I'm going to start doing this from now on because, well, you guys know I'm Christian, so I'm going to do it. I'm going to give a quick prayer, of course. Thank you, Father, who art in heaven. Thank you so much, my Lord Christ Jesus, for giving us this opportunity and for giving us the ability to have a platform, because there's a lot of confusion out there, especially when it comes to economy, that a lot of people just don't understand. So we really do hope to give people a lot of clarity when it comes to that. So thank you for giving us the opportunity. In Jesus' name I pray. Amen. And with that, guys, make sure to follow us on Rumble, obviously. If you guys are watching here, we are live streaming exclusively to Rumble for the next 30 days, as well as follow us on X. And, of course, if you guys also want to follow us on YouTube, you can too. But that pretty much does it, guys. Let's get started with the news today. There were a few. And let's get started with, let's get started with this news that we have right here. So here we have, guys, Bayer to cut dividend by 95% to reduce his debt. Boom! Starting off with a great news. Am I right, Mike?
If you could share your screen while you do that, that would
I
help.
completely forgot to share my screen.
And we were rushing a little bit. So.
We were rushing a little bit. It's fine. It's fine. It's fine. By the way, First Amendment rights, what's up? I know you watch my wife stream Stardew sometimes, so shout out. Thank you for stopping by. Greatly appreciated. Are you seeing my screen?
Hold on. I was looking at my trade.
Yeah, I can tell.
Bear
Okay,
to
good.
cut. Oh, bear. Ooh.
Yeah, Bayer to cut. What was that?
Bearish.
Very bearish. Well, actually, not really. So, Bayer to cut dividend by 95% to reduce his debt. Again, guys, this is a company that they're located, I think, in like Finland or something, or in Germany. And what am I always saying, right? What am I always saying? Companies that can't afford, right? That can't afford that dividend, most likely they will cut it. And this is a prime example. However, you just said bearish, right? Well, Bayer AG plans to shrink its dividend by 95% as it works to reduce debt. Bayer shares rose 1% in Germany on Monday after the dividend cut was disclosed. Now, I don't...
Okay, interesting that they would be bullish on the news, but again...
Hey, look. Well, the way that I look at it, right? The way that I look at it is a company's cutting its dividend to lower debt. That's great.
Mm-hmm.
That's great because you would rather have that than the company go under.
Fair, like I give you that.
A dividend is always the icing on the cake, right? That's not the cake. A lot of people focus on dividends. And by the way, we are going to talk about dividends today as well, guys. That's why I'm actually starting with this one. But dividends should not be the cake. Dividends are just the icing on the cake. The cake, it is the total returns, right? Total returns is the actual cake. Dividends are just a sprinkle at the top. Dividends is what gets you through those lost decades, right? That when the market just goes flat for an entire 10 years, dividends is what actually gets you to the positive, right?
Yeah.
So I look at this and I look at a company that clearly has a lot of debt from what I assume, right? I've never looked at this company before, but a company that has a lot of debt, they're trying to lower it. Okay, let's cut the dividend by 95%. That's perfectly fine by me. In fact, what have I said about companies that we have covered here? Verizon, AT&T, Intel. What have I said about them in regards to their debt and dividend?
That they're debt ridden.
Correct. That they're debt ridden and the fact that they need to cut. They would I would rather hope that they cut the dividend than to stretch themselves thin, taking on debt just to pay a dividend when they have a ton of debt to begin with.
But do you think that certain market like not makers but participants, like because of how that dividend is treated, that basically got another fill in my order. Sorry. I'm averaging down on a trade, guys, so
That's
sorry
fine.
about
That's
that.
fine. You can digress because we're literally just we have
Yeah.
a general topic in mind, but if we can digress if you want, that really
Yeah.
that really is fine.
I'm trying to pick up some. I'm trying to go a little heavier on this trade actually, just because
What trade?
ES bullish trade to the
Okay.
upside.
ES, by the way, guys, the S&P 500.
I'm gonna do a runner there. Yeah, there.
Okay.
Okay.
So what are you saying about certain market makers and the dividend?
So basically, like market makers essentially. Sorry, I'm trying to focus on three different things at once. Um, So people like look at the dividend and they're basically like half the reason that they're in the stock.
Yep.
And to me, it's like, well, you had the opportunity to, I don't know how to put this. People buy the stock just because it has a dividend, and then they just like to your point, they only look at it as like, okay, what is it returning to me? If they don't like, that's why you see a lot of companies that like are almost a little scared to cut their dividend
Not
because
scared, but
they're worried
reluctant.
about.
Not scared,
Yeah.
reluctant. Reluctant.
So
Reluctant's a better word.
essentially, the question I throw out there is, sorry, is that how to put this?
What effects will this have? What effects will this have on people that solely want the company for his dividend?
Yeah.
Yeah. Well, I mean, we saw something similar to that when it came to AT&T. AT&T cut its dividend, I think, in 2021, I think. It was in like a November time. Or at least they announced that they were going to do it in like, I believe, either October, November, or December. I remember this because it was late at night. I still lived in the first place I lived here in Pennsylvania. And we were all locked down still because of the bullshit virus, right? Which, by the way, guys, we're on Rumble, so we could be a little bit more liberal when I guess more liberal when it comes to things. But we still are going to put this out on YouTube afterwards, so we still want to reserve ourselves a little bit. But yeah, I remember because we were still locked down because of the virus. And I remember specifically reading that AT&T was going to cut their dividend, and immediately they just sold off massively. I remember they were worth it around like $30, and after the dividend got cut, it went down to like $15.
Yep.
So, and a lot of people were relying on the AT&T dividend, and a lot of people got upset. But I'm looking at this and I'm like, I look at this and I look at a company that's trying to survive. I'd rather a company survive than to just go under, right? Just paying a dividend, which is not something I want to see, right? The dividend should only be there if they're able to pay it, which is why we take a look at the cash flow payout ratio in regards to the dividend, right? Because cash flow is king. Cash flow is what is used to pay the dividend to begin with. So that's why.
Yep.
We can continue going on with this. We got the German healthcare and crop sciences conglomerate said it will reduce its dividend policy to pay out legally required minimum for 3 years. Wait, what? To pay out the legally required minimum for 3 years, according to the statement on Monday. Bayer will cut the dividend to 11 euro cents or 12 cents or 12.
So basically an Nvidia dividend.
Yeah, pretty much. For fiscal year 2023, down from $2.40 from the previous year. Wow, dude, that's crazy. From €2.40 to €2.40. Yeah, sure, €2.40. There you go. To 12. That is insanely tiny. But if that needs to be done, then it needs to be done. In fact, right here, you could see it from the CEO. One of our top priorities is reducing debt and increasing flexibility. Bayer CEO Bill Anderson said in the statement. What's up?
I have a comment about we're seeing a lot more companies talk about reducing debt. And one of the YouTubers I watch, we watch Heresy Financial. He's been
Yep.
talking about how like it's a cyclical nature of interest rates, where
Mm-hmm.
you had a 40-year period that interest rates were going down, and in the future you're going to have interest rates going up. So it's kind of interesting to, and when you think about it, that we're essentially in like really you could be in that time period where interest rates are going to be going up for a longer period of time. And if that's the case, companies are kind of shifting to that paying down debt narrative because it's going to be long-term advantageous to them. Because if you pay down debt that you don't have to pay the higher interest, you don't have to roll it over.
Right.
Are you kind of shifting the paradigm?
Well, if it is shifting the paradigm, it's shifting the paradigm in a great way.
Which is good, right? Because like we talk about on this channel about like the GDP, debt to GDP ratio, how companies are over leveraged till no tomorrow,
Yep.
overvalued. So it's like, so when you get that shaking out, because like everyone, I think people have a recency bias for the 2017, 2018, 2019 market. A lot of people started trading during then, like even us included.
Yep.
And the only thing that you
What year?
saw
What
during
year
that
did you
time,
just say? Hang on a minute. What year did you just say?
2017, 2019.
I would actually argue majority of people started investing during the GameStop and AMC fiasco in 2021, I believe it was.
Okay, so but regardless, in the recency bias of 5 years, you only know that markets go up anytime there's a downturn. You're fine,
Right.
and essentially, it's not true. There's correctionary periods like 2017's February, which was the shakeout correction. You had 2020, which was another. I would classify as a correction. I know a lot of people say recession, but to me, I view recessions as a little different, like the negative growth in GDP, but it's also where the market sheds like 50% of its value. Like to me, that's where a recession really is, in depressions in the 60s and 70s and 80s. So you didn't get a capitulation.
Right.
That's the other thing. You have to, in order to form a bottom in the market, you have to have capitulation. That's historically speaking. Go back to every single crash in history. Look at the volume in comparison to the most recent times that volume was around it, right? Don't compare it to now, right? There's two different things of how much the indexes are and stuff like that. So in comparison to recent times.
So
Uh,
so let's actually keep on reading this. I do see chat. I just wanna point out something very, very important right here. So it says our amended dividend policy, which considered investors' input was not taken lightly, will help us to do so. The dividend cut came as the company and investors deal with bears. So look at this. As the company and investors deal with bears, a long struggle to recover from its ill-fated purchase of Monsanto. I did not realize that they purchased Monsanto. That was
I
wild.
forgot they did.
I did not know that.
A company that supplies my company's polyurethane resin actually broke off from Bayer Chemical very, very long ago. So, fun fact about Bayer for all those, Dr. Bayer and Dr. Henneke were the two that invented the appliance industry, the polyurethane technology.
All right.
So the Henneke made the mix head, Bayer made the chemical. So just an interesting fun fact that I try to share with you all. But Monsanto, everyone knows, probably can figure out our opinion of Monsanto.
Yeah. Yeah, but again, at the end of the day, there is no such thing as moral investing, right? So I read Monsanto and I'm just like, yeah, well, I know them, right? But, clearly that was a bad investment for them, right? Clearly that was a bad investment for them to the point that they are struggle to recover from its ill-fated purchase of Monsanto and legal liabilities associated with the Roundup brand. So, yeah, clearly it was not too good for them. However, this leads me, this is a great segue, by the way, to something else that happened today, or at least we got an update because this came out of the blue. And I just want to pull up the article and then we'll take a look at chat. But take a look at this. Capital One nears deal with Discover Financial.
Ooh.
So Capital One's planning to acquire Discover Financial.
Okay. Well, that's pretty interesting.
Yeah, I did not realize that was happening. But let's take a look at chat really quick. So, First Amendment Rights says Mermaidia. Yeah, that's my wife. She plays Stardew and Sims. Let's see. Ghost says hello.
Hey,
Go says,
Ghost.
anyone to be buying DWAC because the IPO is going to happen. Well, again, just because the IPO is going to happen, and I get it, right? The whole Trump thing, yes,
What is DWAC?
I get out of my live
Yes, I
stream
live under a rock.
right now, dude. Get out of my live stream right now.
Is
How do
it
you not know
Trump's
what DWAC,
thing?
dude? It's Trump's company.
Social media?
It's the truth. It's the company that controls
Oh, Truth Social?
Truth Social.
Okay. No, I will
Like,
not be buying it just because it's
oh,
Trump.
hang on. I muted you from the mic. Sorry. I guess sorry. I muted you
No.
on my headset.
Out of anger, he muted me. So
I
no,
thought it
I won't
was
be buying it
yeah.
because, well, I have a rule. I don't buy IPOs because seldom, rarely, and I challenge anyone in history to find me where an IPO didn't shed at least 50% of its value from IPO.
Coinbase, perfect example. Well, a lot of people are saying, "Oh, but the run up, And guys, if by all means, if you want to put your money into DWAC, whatever, right? But it really is up to you. This is not financial advice, obviously. But for at least for me, I'm only going to speak for me. Mike, you already said your piece. At least for me, I do fundamental investing, right? I need to take a look at the company's fundamentals. I understand, I understand that. By the way, I can hear myself in the mic. I understand that, yes, there is potential, massive potential to the upside. And a lot of people would say, oh, well, why don't you just do it? Well, it's because I don't want to gamble, right? I
Bear
want
back.
to, yeah, no problem. I want to make sound investments based on past data. So unless I have the past data, I don't really, I get that it's Trump, and don't get me wrong. You guys know our opinions about Trump right now, which, by the way, we do like him, but it's still not an investment, right? It's still not an investment. This is the same reason why I haven't bought into Rumble stock. I love the company, right? I mean, we got the partnership, but I'm just I'm just not that's not funny, Ghost. But I'm just not willing to put money into something that I do not have historical data for, right? I just don't. I considered, so First Amendment right says, I considered rum, but I haven't thought of DWAC yet. I bought rum already and have DWAC. DWAC seems to be profitable right now. Well, again, profitable in what sense, right? Because I haven't taken a look at their fundamentals. Maybe they are profitable. Are they profitable when it comes to their free cash flow? Are they free cash flow positive? If they're not, then I need to at least see a trend of the free cash flow going up, right? And Go says, what you kami, my dude? Don't even start with me. Don't even start with me with that comment, because you do realize, Ghost. I mean, you probably do know. Mike is Polish, so his parents lived under the Iron Curtain, and I'm Cuban, and I was born in that nonsense. So yeah, no, I'm fully aware. I'm fully aware, but no, it's just I don't like buying into companies that are, just like, okay, fine, DWAC can go up, rum could go up, but you also have companies like TTCF. Right, which, by the way, if you guys don't even know what that company is, let me pull it up for all of you. Let me pull up TTCF for all of you guys. This company was pushed hard during the post-pandemic, right? And look at this. It completely crashed and burned. And a lot of people were pushing it. If we take a look at this on the max, look at that. Boom. It IPO'd, I believe, in actually, that IPO'd like right here in like 2018. It did a massive spike up as of 2020 when the whole pandemic was happening. It reached a peak. Look at this peak, guys. $28. And a lot of people were saying to the moon right here. And then it just continued to crash, to the point that right now it went completely bankrupt, and it's worse than a penny stock at this point. So I look at the, Tattooed Chef plans to file bankruptcy, stock craters 35% after hours. So this is exactly what I'm trying to avoid. Am I saying that DWAC and Rum are going to do that? No. But that's not the point, though, right? That's not the point. You could have avoided this if you looked at the fundamentals. That's my whole point. I'm of the opinion that you should definitely look into the company's financials first, and then make an assessment. You will have to look into it. Well, let's pull up DWAC right now, right? Let's pull up DWAC right now. And right off the bat, well, first of all, see this right here looks a lot like the graph that we just saw when it came to Tattooed Chef, right? Again, not saying that it will, I'm just saying it looks a lot like it. But if looking at the fundamentals right here, first of all, we only have, going back to December 2021, Let's just start off with that. So I don't have much data to go off of here. We take a look at, do they not have any revenue either? Yeah, they literally just have other revenue. They're not even reporting revenues yet. We got net income. Net income negative, 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 going further into the negative every single time, right? So I look at this, and this is just red flags for me. Let's see. If we take a look at cash from operations, negative, 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 going further, and then let's see. They don't even have capex, so I can't even figure that out either. So yeah, I look at this and I just like, it's a hard pass for me. Could you trade it? Sure. Right? Could you trade it? Sure. But from an investing perspective, investing 10, 20, 30 years, can't do it. I just can't do it. So yeah. I remember that company, LOL, didn't buy any. Yeah. Tattooed Chef was. I remember a lot of people pushing it. A lot of the YouTube people that got real big, real fast during COVID because there was nothing else to do but watch YouTube videos. They pushed that stock. A bunch of other ones too, like Peloton and Palantir. Palantir honestly was like, Palantir's honestly like the Amazon of that era. Where out of all that trash, they were the only ones that were good, kind of good. It's just they were overvalued at the time. So yeah. But Mike, are you back? You know, that's a little bit terrifying, the fact that he's not back yet. Hopefully he's not answering a phone call. I swear, if he's answering a phone call, I'm going to lose it. All right. Let's go back to this news, though. Capital One year's deal for Discover Financial. So take a look at this, guys. Is nearing an all-stock acquisition of Discover Financial Services. So do you guys own this company? I know we have taken a look at this company whenever the earnings for the banks come out, or whenever their earnings come out, DFS comes out, and they've had massive moves to like the downside as of recently. But tell me, are you guys planning to buy this company? Because here's the reason why, right? Here's the reason why. They have not reported yet what price they're going to buy it at. Let's take a look at what Discover is actually running for right now. So it's at 110. I don't know if they're going to pay more for it, right? I don't know if Capital One is going to pay more for it. Odds are they are. Probably at around like, I don't know, 120 maybe. So if they do end up paying more for it, then you buy right now, that acquisition goes through, you're getting that difference right off the bat. So, you know, it's a pretty much guaranteed win, capital gains win right off the bat. I don't know if you guys are willing to do that. I don't know do they pay the dividend? They do pay the dividend, so you guys will be losing this dividend, which is actually it's only 2.5%. But you guys will be losing this dividend if you already hold it. But yeah, this is just something that you might consider, seeing that they are going to get bought out by Capital One. A deal could be announced as soon as Tuesday, according to the Wall Street Journal report, which cited people familiar with the matter. Oh, I hate when they use that. Capital One intends to maintain the Discover brand on the cards and network. Interesting. I'm pretty sure that it's an all-out stock acquisition. So yeah, whoever owns the shares would probably get liquidated, or actually maybe not even liquidated. Maybe your shares would just be transferred over to Capital One. I don't know how that would work. I've only ever had one company ever be taken away from me, and that was Store Capital, and it went into a private company, and all my shares got liquidated. So let's see. Bloomberg first reported on Monday that Capital One has been working with advisors to consider a potential acquisition of Discover Financials. Discover has a market cap of $28 billion, and a deal is expected to value. Oh, here we go. And a deal is expected to value the credit card company at a premium to that. Okay, good. So the deal is expected to be valued at a much higher price than that. So again, that pretty much seals the deal. Again, they haven't said what price they're willing to pay for it. But if they do pay more, right? If they do pay more than the $28 billion, you're pretty much guaranteed a capital gains right there automatically. So yep. Tell me, are you guys willing to pay for it? So, you know, are you guys, because currently Mike, DFS has a current price of 110. So if they pay anything higher, if they buy it, your shares will get liquidated with a guaranteed capital gain. So that might be something that people may want to do.
What are they What is their buying price?
You're a little bit loud. I may have to mute you on that one. Yeah, that's fine.
What's the buying price?
They do not know yet. So they basically said here,
Oh, so they're not announced. Okay, so people may. What's going to happen is it's going to skyrocket
yeah, see right
because
there.
they're going to. Deals is quite the value though.
Yeah, the deal is expected to be valued credit card company at a premium to that, so higher than the 28 billion market cap, but it'll just be, I don't know, maybe 30 billion, maybe 35 billion, I don't know, right?
Is there any news that just came out in the market?
Like just now,
Yeah, I'm curious.
I don't know, I don't know,
This market's not liking it.
really. Our future's
Not
falling
liking
down right
something.
now.
Yeah, it's freaking right when I have a bullish trade, 3 contracts on. It's
Damn.
like let's fall down and let's F Mike.
All right.
You know
So
what I'm gonna do?
what?
You know what I'm gonna tell futures?
F themselves?
Pretty much. I'm gonna add.
You're gonna add, or you're gonna double down.
Dude, hey, at this point, I'm willing because let's see this bracket sell.
Regardless, though, so this right here is some pretty bullish news if you do own Discover. Actually, bearish news if you own Capital One. Usually, stocks fall for the buyer and stocks rise for the buyee. So, yeah. But there's actually one other news that I wanted to talk about before we go into the main topic of this segment, and that is the fact that one of my favorite companies, one of my favorite video game companies to be specific, is actually, well, first of all, if you guys are into this, we finally got official news that we're getting a new console for starters. I know this isn't a gaming channel, but we're finally getting a new console, which a lot of people were suspecting. Now, the bad part is that, I guess I wouldn't even say bad part. The smart thing is that they are delaying it to the holiday season of this year, which honestly is fair, right? Usually companies do that. But the one who I'm talking about, guys, is Nintendo. Nintendo,
Okay.
actually, yeah, this is a company that I really would like to own one day. I haven't really found a reason to yet, but I love their IPs, right? Their IPs is just, out of all the video game companies, this is it, baby, right here. To this day, I used to play Call of Duty, I used to play Battlefield, I used to play all that stuff when I was younger. Honestly, I found myself now that I'm old, hitting 30, 28 years old, I found myself wanting to play Mario Kart, wanting to play Smash.
Yeah, that's kind of true. But
Animal Crossing. So
if you want to just digress for a second,
sure, we can.
If you want to show my trade,
Sure, we can do that. Let's see. First Amendment right says, lurkers hit that like or the cat gets it. All right, let me show you. All right.
yeah. So basically, I'll explain what I saw, right? So let me know when I'm ready.
You're good.
So I'm not going to show you guys the trading platform exactly, just because it's not a lot of detail there. But this is a trade view. So right here is where I
What are you
entered my
looking?
first.
What are you looking at? What are these two graphs? What's the
Futures.
left? I know. What's the left and what's the right?
Okay, same micros. 1 minute chart on the left, 5 minute chart on the right. You see how the cursor is kind of doing the same thing on both?
Uh huh.
So I started my position here, added here, and now I added here.
Oh my goodness.
So 2 contracts, 1 contract. My average share price is 514.25. We're currently at 513.50. So I am in the current position down $15.
So what is your max loss?
$100 probably, roughly,
okay.
give or take.
Oh, okay.
$100 and then probably 400 profit.
Okay. Wow, that's actually
And
a really good upside. That's a
me-
really good upside.
Well, that's futures. And also looking at this volume, big spike on volume and then kind of petering out now. So I'm like, I've seen this before where you get the dump in the volume and then they rip it right back up. As we're talking right now, and this is live data, so it's coming right there. I'm break even right now. So every time I've learned when markets are kind of moving irrational during the Asia session, not the New York session, guys. And the other thing is, you see down here the smart money flow just being buried down here. I will keep adding every time it's down here on the 5 minute because it does stuff like this, where it's like to the moon green. As you can see here, we went from red to like a violet to a lighter red, violet, and then green. So this is like This is Lux Algo for all those that want to know what it is. We have a huge potential to run back up to green, especially with the market being an extreme greed. And this is the same volume profile. You actually get more volume tonight versus last night. As you can see, like in comparison, the volume is pretty meh, but around 9:30 today, we got more volume, and we're actually getting similar volume to what we got in the active trading session. So one of the things, if you look right here, the volume, we're very similar in the chop going down. So I'm like, okay, strong delta move coming up right here, rotate like this V shape. Whenever it does these like Vs, I always like buying those and counter trading the market because yes, it has gotten me into a hole a couple times. So if someone's thinking that, yes, absolutely, as it has come for my butt. And then Ghostwalker says my trade view doesn't look like that. Uh, uh, duh, 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 duh.
How does it look? I don't know. I don't know anything about TradeView.
So
Unfortunately.
Ghost, what exactly is like? Not is it white? Is that what you're referring to? Like the dark colors? I'm just curious what you mean.
That is such a okay. All right. Well, funny thing you mentioned Asia.
No, that's what I'm asking. Like all this is like so all this like how the candles look like the waves and everything. That's all Lux Algo. So
Okay.
I'm a lifetime member. I got it in right before they got rid of lifetime membership. So um, I've liked their stuff for swing trading, and then I've gone into futures trading with them, and I really really like them a lot for futures because it's pretty awesome, all the indicators. Because normally this is what you normally get, right? This is like the standard like like aftermarket or regular trading hours type thing, what you see, right? So
Actually, it might be what he has by the sounds of it. So,
let's see. Well, we'll see. He throw a comment, Ghost, so I understand.
but funny thing you actually mentioned Asia because going back to what we were talking about when it came to Nintendo, very, very interesting. So obviously, as I just said, guys, I love the IP of Nintendo. I love the IP of Nintendo more than anything else on this. Like seriously, the only one that I like more than Nintendo, and
He talks about Nintendo every time incessively. So
I
you
love
guys
Nintendo.
you guys are gonna hear the next like 20-minute rant now.
No, not 20 minutes, just 20 seconds. But Nintendo's one of the companies that I love their IP. There's only one other company that I've actually always said if I become like I'm 100, like if I have a net worth of several $100 million, I would buy this company out completely. Like seriously, I would absolutely buy them out. Do you know which company it is?
No.
Sega, because I am sick and tired of the way they did dirty to Sonic. I can't handle it. I really can't handle it. So
That's
I'm
funny.
serious. I'm 100%
That's
serious.
funny.
I'm 100% serious. All we wanted back was the Sonic Adventure 2. And by the way, now I'm just rambling about my childhood here. All we wanted back was the Sonic Adventure 2 battle kind of games with the Chow Garden, and we never got that back. It was so annoying. So if I ever have the opportunity, I'm buying that company out and I'm making Sonic great again. Yes, I just went there. So you were saying something?
Finally found out what spooked the market
What?
4 minutes ago. So that would be right about where that candle was.
What?
Um,
This is something big or huge? Bigly?
one of the Ghostwalker says a bunch of wedges and support and resistance lines. I use Lex Algo. I have to look at.
Oh, he uses Lux Algo
You have
too.
to. Okay, so Ghost, do you have the premium version, or you use some of their scripts that they put
Do you want me
out?
to, do you want me to pull you up again?
No. I can talk to it. Just
Okay.
but going back to what I was saying, it was.
Let me go over here.
Let me see. On financial juice, it's just
Okay.
China's foreign minister talking, so nothing really there. But RBA, so one of the central banks, board needs more time to gain confidence in inflation levels.
Isn't RBA Bank of Australia?
I can look it up on the
I'm
economic
pretty sure
calendar.
RBA. I'm pretty sure RBA
Yeah,
is the
RBA
Bank of
meeting
Australia.
minutes.
Yeah.
It's their meeting minutes that came out at 1930, which is exact right. No, so these sons of guns, they front dumped it into the move. It's the knee jerk. So it's guys, anytime you have a catalyst event, the knee jerk's always wrong. Like every time, like if you look at Powell and everything, or CPI, you always get the knee jerk to the different direction that you're going to run. So looking at that, I'm like, okay, historically speaking, markets when they slam down like this,
If
they're
you guys heard that, that was just me trying to find RBA on Financial Juice. I'm so sorry for that.
it's
Yeah.
the most recent post they did.
Oh, is it the most recent post? Okay, I was
Yeah.
going all the way down.
Oh,
I
so
think
Ghost. So
got Bank of Korea.
yeah. So
Oh, here we go.
Ghost.
RBA. Hang on a minute. Let me pull that up. So
Yep.
we got
And as you do that, I'm
RBA.
going to use the restroom.
RBA board needs more time to gain confidence in inflation levels because they did think that didn't they say something? And as soon as I ask questions, now he leaves. I think they said something about keeping inflation, lowering inflation, lowering interest rates. I think for the Bank of Australia. I think RBA, by the way, is the Bank of Australia, if I'm not mistaken. But all right, I guess that's a little bit interesting. So. Yeah. Well, I love how he just goes away whenever we're in the middle of something. And now either I can go to what I wanted to talk about with Nintendo, or I wait for him till he gets back so he finishes what he was talking about. Gotta love Mike, but okay. Well, I guess I'm just going to do that. Guys, I don't like switching back and forth like that. If we take a look at Nintendo, they actually fell. Obviously, the Nikkei was open today, and they fell 4.28%. But the reason why they fell is actually great. Because, well, take a look at this. We actually have the official release, not official release, but I guess official declaration from Nintendo that we are getting a new console. So for all of those of you who do play Nintendo Switch, which I'm one of them, and have been wondering, are we going to get the Switch Pro? Are we going to get the Switch 2 or whatever? They officially dropped it. They officially announced that yes, they are going to have a new Switch. I don't know how they would call it, right? It could be the nonsense like Wii to Wii U, but they are having a new console until the end of next year. So that's great. Okay, I think I said they're delaying it to the end of this year, next year, which is actually I'm perfectly fine with that. I'm perfectly fine with that. So yeah. But look at this, Mike. Nintendo shares fell today 8.5% in Japan.
Yeah, because they were delaying a product launch means they're delaying possibility of more profits, more revenue.
Yeah.
So market's a future discount mechanism. So their delay in the future means possibly less. So it gets priced in now. Priced in means 8% down.
But this is huge though, because a lot of people weren't expecting that we were going to get the Switch Pro, the Switch 2 at all. And they just essentially confirmed it. So there you guys have it. Pretty soon your Switches will be obsolete. Don't buy any more games, I guess. Shout out, by the way. Hang on. Shout out to the 24 of you guys watching right now. Wow. Absolutely
So I do
incredible.
want to address Ghost's comment. So he says I pay for it. So that means you have access to premium. If you want to jump back to my screen, I can share something.
Yep.
So Ghost, what I have set up is the if I go to indicators, so the bottom is the smart money. The bottom is the the oscillation matrix, and I have it set to the default for it. I didn't change anything in here, so I just left it as the setup is and everything for smart money flow, and I haven't changed anything there. For these two charts, I use the split view here on the top right hand side for trade view, so I can get the two split views. So I can see the 1 minute on the left and then the 5 minute on the right. Same exact indicators for both. I have it set up for price action concepts. Signals and overlays. Reversal and trend catcher. Those are the only two I have set. I do AI signal classifier, so it does this all. And then the preset is scalper with confirmation and exits. So that's the only thing I have there. I have trend, strength, volatility, and volume sentiment checked because I don't think squeeze is really a value to me. And that's all I have as the default for that. And then price action, this is where it gets a little more complicated. I do MFT structure scanner just so I have it and I can see if anything pops up recent. I need to make that one bigger in the corner. And then I do volume order blocking, which is all these zones right here. This is basically supply and demand zones. So if you're familiar with supply and demand zones, it just automatically does it for you. So it's area where you can find resistance and area you can find support. If also, like, for example, if you break through an area, then it's going to disappear. So I look for that for some trades sometimes. One thing I don't like is the market just consolidating as this is going up. I'm just like, yeah, not liking that thus far, but oh well, can't always get everything. But and then I have a fair value gaps, which are these little red and green setups here, and that's basically what I used to trade. I try to minimize the amount of stuff I have on the chart itself. I like their scalper preset because I usually scalp, right? I don't take long trades with the markets, specifically futures, right? So I have different settings for different stuff. But for my futures trading, that's what I do.
All right. So since you're just debuting your thing right here, I would like to debut something of my own, good sir.
All right.
All right. So I actually want to cover Nintendo a little bit here. And by that I mean I want to take a look at their financials. I want to do a quick discounted free cash flow on it, and of course take a look at their fundamentals, if that's okay with you.
Yeah.
Okay. One of the ones I use is trend lines and breaks. That's what Go says.
So you're talking about Ghost. So you're talking about the like if you jump to my screen just so.
Oh
you
my
can
goodness,
see.
Mike.
Sorry.
Okay, no problem.
Is it this in the in price action concepts and Ghost? That's what you're talking about. This trend lines right here, in liquidity concepts. That's the only thing I wanted to show so he could understand what I was referring to.
Got you. All right. Well, I would like to do a quick fundamental analysis on the company Nintendo. And the first thing that I'm gonna debut that right here, Mike. I have updated the calculator.
Oh, finally.
I have updated the calculator. It's not fully automatic yet. Unfortunately, it's taking a long time for that. We're having technical difficulties when it comes to that. But I officially updated it to have the 10-year perspective. So, you down for this?
Yeah, let's see.
All right.
First time rodeo. So
I also added a few things as well. It's a quality of life improvements.
I was gonna say probably quality of life improvements.
Quality of life improvements. So we got over here, guys, the ticker for Nintendo, NTDOY. Now that is in Japanese yen. So just straight off the bat, don't think this is, what is that, 10 billion? Yeah. No, sorry, $10 million. I think that's in Japanese yen. Maybe not actually. Maybe that is the market cap.
No, the 10 trillion.
Yes, sorry. Yes. So this is 100% in Japanese yen. So There you guys have it. A PE of NA with a current share price of $14.30. Now the thing about Nintendo, they actually do pay out a dividend. Believe it or not, 35 cents per share. And well, let's take a look at this company. On the 1 year, they're up 40.75%. Year to date, 10.08%. Look at this range of $9.26 to $15. Now, the main issue with Nintendo, or any, I guess, gaming company, is they're going to be driven by sales of their games and consoles, right? So, depending on how much the Switch or the Switch Pro sales, depending on how much Mario, Zelda, AAA first title games sell, that this is going to be correlating to that. I remember when Pokemon Go first came out, Nintendo stock rose massively because people were like, "Oh, it's Nintendo," and then Nintendo came out saying, "Guys, we're just the publisher. we have some ownership of it, but we're not the owners. That's Game Freak and the Pokemon Company. It's not us." And then their stock immediately collapsed after that, but that's neither here nor there. Today, though, as you guys saw, they did fall 4.28%. Now, looking at this dividend, they do pay the dividend, and their current yield is 2.45. Understand, though, that when it comes to foreign companies, you have to pay a tax on that dividend on top, which is the foreign tax, on top of the tax that you would get from the IRS here in the United States at the end of the year, which It's going to be the main topic of today's video.
You get 2 sticks for the value of 1.
Correct. Yes, correct. But it's owning Nintendo, and it's so fun. A 5-year CAGR of 3.74.
Loses you money.
Well, look, I'm not saying I'm just saying it's fun in the sense I own Mario, right? How many people could say that? 5-year CAGR of 3.74%, 0 consecutive years of dividend payment, and I think this may just have to do with, I think this says, they actually had a split. I didn't know they had a split in 2022. Interesting. I think that this actually that could just be because of the split. I just realized that dividend growth being 0 could be because of the split, and Seeking Alpha isn't reading it correctly. They don't have a next dividend date, but you can see that they do pay semi-annually. So the last payout was on December 18th, so most likely the next payout will be in like June, right? June of this year. So there you guys have it. But coming back over here, this 35 cents with the current amount of shares outstanding means that they pay out $2.6 billion every single year. Again, it's actually, I do think this is correct because all of these numbers that we're going to take a look at from now on is based in US dollars. So this is correct. So $2.6 billion, 5-year average free cash flow. Well, actually, I'm so sorry. This is incorrect. This is not 5-year average free cash flow. This is 10-year average free cash flow. So yeah, I forgot to change that one. The 10-year average free cash flow is $946 million, negative 946. So if you take this 2.6 billion, subtract the 10-year average free cash flow, and then you get that number. The last year's free cash flow is $56.8 billion. Actually, oh, no, I'm sorry. I forgot to change this. Dang it, I forgot to change that. I'm so sorry. Sorry, guys. That's not correct. That is not correct.
While you do that,
Yeah.
side note, yields are actually up a good chunk going into that
yields.
RBA bond yields. Yep.
Okay. All right. Yeah, guys, I'm so sorry, but this is not correct. I'm going to have to change that for tomorrow's stream. But yeah, that's absolutely not correct, which means this is not correct. However, what is correct is this. Look at this, Mike. Look at this.
That's very interesting.
Yeah, look at that graph, though. Look at that graph. By the way, oh my goodness. Dealing with graphs is the worst thing on Google spreadsheets. Dear Lord, it's so annoying. But there you guys have it, guys. Here's the 10-year net income for Nintendo. 10 years ago of $106.2 billion to 1 year ago of $4.52 billion, increase of 4,161%. Now, you're going to have to switch your mindset here because now you're not looking at the 5-year. So 1,000+% may actually be normal.
The average.
Yeah, in this case. So just FYI.
So that's where the thing is, it's also you got to take into account like inflation, right? Now you're looking at such a long period of time. In Japan, inflation's been because again, this company is based in Japan.
Yep.
Its inflation has been relatively high
through the roof.
Yeah, so that's actually not uncanny to see that net income going like that, and even just forming like a linear trend. That's the most impressive part about it, considering that their inflation's been parabolic.
Though as of 3 years ago, they are starting to come down, though, which you could say that these were the outlier years, right? 2020 in this case would be, I believe this is 2023. So this is 22, 21, 2020, which makes sense, right? 21, everybody's staying at home, right? Nintendo, gaming. So that pretty much explains that meteoric rise right there. And then coming back down to the norm. Yeah, I could see that happening, right? So what do you think about this grade? It's going to be a little bit difficult because this is the first time we're doing this. If you want to skip this and just cover a normal company tomorrow, that's fine. But, maybe we should just do this for like
it's good practice.
Yeah.
So again, you got to take into account their inflationary period, right? So cost is going to impact net income as well, just because they're also paying for more. We also export a lot of inflation through the dollar going to all these countries. So again, you're talking about a company that has a lot of like different little things feeding into it.
Right.
But if you look at it like, okay, so 8 years ago would have been 2014. No, 10 years ago.
2014. 2014 is right here.
So 2016.
Yeah.
So start of the U.S. like crazy run in the markets. So companies naturally were making more money across the board. looking at it, I'm like, okay, that's not bad. And then 3 years ago, you have that big rise, and it's kind of just leveling out, right?
Yeah,
Coming back to that longer term run
right
trend.
here. Yep.
Obviously, the 3 and 2, and then the 10 are kind of skewing that trend a little bit. So overall, it's actually very good.
So what do
Now,
you think?
perfect chart would be like, just hit everyone on the dot.
Right.
Like, but for what it is, I'm gonna say an 85.
I'm actually really curious to do companies like Microsoft with the 10 year because it's
Probably
gonna
gonna be
give
terrible.
it's gonna give a lot of clarity
Concept.
now. Yeah, it's gonna give a lot of clarity now. So I don't know. For me, I'm gonna say roughly. Oops, sorry about that. I'm gonna hit. I hit my leg on the table. I'm gonna put guys like a 75% when it comes to this one. So moving now to the free cash flow. Now they did have negative free cash flow as of 10 years ago, going from negative 414 billion. Million, negative 414 million to today of 2.3 billion. Yeah, $2.3 billion dollars, increase of 647%. Once again, you do see the outliers right here. This being, was it 20? Oh, I'm going to have to keep doing this because I'm not used to it. This is 23, 22, 21, 20. So the outlier years is right here. Take out the two outliers. This isn't even looking half bad. So what do you think?
Yeah, and also like the other question I have is, wouldn't it be more? I would expect more. Well, free cash flow is if their expenditures are going up as well, they wouldn't have as much free cash flow. But also their net operations should be coming in more. So I'm thinking of like the inflationary environment, right? So that's what I'm trying to factor into my result.
Right. Well, just FYI for future companies, you really can't. You have to take that into account, but at the same time, you kind of can't. So
Yeah.
yeah, like it's good practice. But what do you think
Yeah, I'm,
about?
I'm really curious to see like a Microsoft or Apple on
Yeah,
this.
yeah, like a good one that we know like the back of our
Well,
hand,
we know
basically.
where we gave it before recency and like what we value and stuff.
We know the feel. No, we know the feel.
Yeah.
So what do you think
For
about
for
this one?
me, it's consistently recovering over the course of 10 years, right? You have your bumps in the road. You can consider like the 7, the 10, 3 and 4 of the bumps, which again, when you're looking at 10 years, you're always going to have bumps.
Right.
And
Absolutely. And the further back you go, the
essentially,
more it is, right? So,
yeah, the more noise that you get also.
right.
So for me, it's pretty good. I would say 80.
80. Okay. I'm actually going to go with roughly like, oh man. I'm going to go with like a 70% with this one, mainly because you can see that, yes, the outliers are here, but I don't know. I feel that this 6 and 5 years ago to here, it is a big jump by like $1 billion, right? So yeah, I'm gonna go with
But
like a
is it
70%.
dollars or Japanese yen?
No,
Or
this is in
Japanese?
dollars. All of these are in dollars because
Okay.
Seeking Alpha. If we come over here, we go to financials. We could see right here, currency, U.S. dollars, right
Okay.
there, right there.
Fantastic.
If I could move it, I don't know if I could move it, but yeah, I really can't move that. But dismiss. Okay, that was weird. It pulled up a device setup. I don't want to do a device setup. But yeah, currency is in U.S. dollars. So all of this are in U.S. dollars.
Ghost is probably trying to hack you.
Nope. Don't do it. All right. So looking at now the revenue, we could see that, well, 10 years ago, I keep wanting to say 10 years ago, 5.6 billion to 1 year ago of $12.1 billion, increase of 117.23%. Once again, the outlier years here were 4 and 3, well, mainly 3, right? But then they came back down, but look, they fell lower than what they were as of 1 year ago. They're lower than what they were 4 years ago, but it is coming back down to this mean. But you can see that from 10 to 7, they are scaling down. See, the issue with Nintendo is the fact that, the Wii U sold horribly.
What
So
year was that?
I think it was in the 2014s, if I'm not mistaken. Yeah, I think it was 2014 to 2016, if I'm not mistaken. Because when did the Switch come out, basically? Let me see. Let me look that up really quickly. Nintendo. It's hard to believe that the Switch is out. It's so old. It really doesn't feel like that, but it actually is a really old console. Let's see, release date. Initial.
I remember when the NES came out.
I'll be quiet. Yeah, March 3rd, 2017. March 3rd, 2017. So anything, so 2016 and below, it was Wii and Wii U era. You remember when the
Yeah.
SNES came out?
Yeah.
Huh. I never played SNES. I went. Remember, I was born in Cuba, so all I played was Nintendo
Yeah. Well,
64.
I remember when it
So,
came out. I never actually had it. A buddy of
yeah.
mine had it from when I was younger, but
So what do you think about this revenue?
so I think that they had an era, right? So they had an era where they released a product that didn't do too well, so the revenue dropped, and then they reinvented themselves and got better. So
Two,
the
one,
6 to 1 year ago is more
three,
of
19, 18.
what you
Actually,
call it.
actually, look at this. Look at this. So this right here, I believe this is 2018 right here, which would mean a year with the Switch out already, and the Switch sold really well, which then got to that massive spike from seven
Yeah,
years
which
to
makes
6 years ago.
sense.
So
Which makes sense.
yeah,
So again, in that era, I don't know.
what do you think?
To me, I would look at it from like 6 and beyond. I wouldn't
Okay,
look at it before.
okay,
And if I do that, okay, like you got some statistical outliers. The 1 year ago is a little concerning, and especially with the delay. So I don't expect revenue to necessarily get back to the trend.
okay,
So you could have like stagnant revenue. So I'm gonna say like a 70%.
okay. Yeah, I'm gonna go with roughly the same as well, a 70%. All right, now this is where I actually added some quality of life stuff. Total assets,
Okay.
reference only. So these are just the assets.
Okay.
Okay, so there you go. There you have the assets. It is increasing, as you guys can see right there. Another quality of life, total liabilities, reference only. So,
So kind of going in tandem.
right, kind of going in tandem. Not really. I mean, yeah, the assets are a little bit increasing. They're actually remaining the same from 3 to the trailing 12 months. Well, the liabilities are coming down. So, that's, I guess, good to see. But now the one that we used to have before, which was this one. Now, this gives a lot more clarity because now okay, the liabilities from this point on, right, from the 3 year ago mark, they're actually decreasing while the assets are kind of remaining the same, which is causing this to increase. Now we know why they're increasing or decreasing. Quality of life, quality of life. So
Yep.
there you
So
have it.
for me, it's a beautiful graph hitting almost every one in a steady pattern. Their average assets is literally like 5 times, no, what, yeah, more than 5 times what their liabilities are. So,
16.8 billion liabilities of 3.1 billion.
yep.
So what
So,
do you think? 90, 95?
so for me, I would say 95, just because it's not like perfectly perfect, but actually, I would say 100 because
Yeah, you'll never be able.
it's
You'll never
really
find one
you're
that's
never the
perfect.
10 year we don't.
Hello?
Excuse me. Sorry. Um, the 10 year is so. I don't think we're gonna find a company that's basically gonna hit it every time.
No, again, this is the first time, guys, we're looking at this, so we have no reference at all to other companies. So the fact that we're looking at this, it's a little bit jarring, honestly, it really is. So yeah, we're gonna put 100 for this because I highly doubt we'll find any company out there that hits, that the trend line hits those graphs every single time. Now look at the. This is the first time I'm looking at this. Also, why did this get messed up? Why did this get messed up? Is this... Oh, so this is the trailing 12 months right here. Okay, I see. This is the trailing 12 months, I believe. Yeah, that's the trailing 12 months. So, wow. You can tell 2021 did good for them, huh?
Yeah.
From
The only time they were positive.
the only time they were positive. Actually, from 7 to 4, they were increasing. Even from 10
I love
to
how
8.
it kind of undulates.
Yeah,
Like 10
it does,
to
right?
8, 7 to 4. Now you're just kind of going all over the place, especially with the trailing 12 months. You're just in a crater.
Well, I think it's because also, the Switch is pretty old. Not a lot of the games are being made for it. A lot of people are literally waiting for their new console to come out, right? The majority of their money comes from, the Mario, the Zelda, the Pokemon, and
Fair. But also the question is, are they going to be able to, people going to hold out long enough for, or is that enthusiasm going to die away?
well, the way that I see it is the fact that people have been questioning whether or not we're going to get another console from them soon, and the fact that we just got confirmation today, I think people are excited. I think people are literally saying, because remember, this is gaming, guys. This is gaming. When it comes to games, it's always, and gaming consoles, it's always better to put out a product later than expected than to put out a product on time, that sucks, right? Everybody remembers a bad game. Nobody remembers that the bad game was put on time, right? Everybody remembers a bad game, not that it was put on time. But nobody remembers that the game was put out late, yet everybody remembers that it was a good game. Make sense?
Yeah, that's true. That's very true.
I would rather them take their time with the console, make sure everything is good, make sure we have nothing, which, that's not always the case. But you get my point, though. Fix all the nonsense joystick drift or Joy-Con drift that we've had with the Switch for years now. Even after they said, oh, we fixed it, they never did. So I'd rather have them wait, clean out the kinks, then release a good product. That's just me, right? This isn't, this is not like a pharmaceutical company, right? So you kind of have to take it like that. So what do you think about this? I have no idea what to make of this, honestly. And I also do need to fix it because this is the trailing 12 months, but the cash flow minus liabilities is strictly for only to the 1 year ago, not the trailing 12 months, because the trailing 12 months, we don't have that yet. So
I honestly don't know what to make of it. To be transparent, it's very cyclical in nature, right? So they're going to go through, which could be correlate to what you talked about, how their product stack works and everything like that.
Yep.
So we have to just be weary of that. So it's a 50% because I just don't understand it.
Fair enough. I'm gonna say the exact same thing, 50%. And as of the trailing 12 months, we're at negative 3.44 billion with an average of negative 1.5 billion. So that's really bad. But then again, the trend is to go up, but that's all dependent on the games, right? It's all dependent on the games. Shout out to the 25 of you guys watching right now. Make sure to like, subscribe, and follow, and talk to us in the chat. We really do like it when you guys talk in chat. Now, take a look at the shares outstanding on the 10-year. This is crazy,
actually,
dude.
Increasing. Wow.
Well, they did increase it as of 8 years ago, right? From 10 to 8 years ago, actually. So on the 10-year, this is a decrease of 1.2 billion shares to today of 1.16 billion shares. Decrease of 1.65%. This is why I really would like to see companies like Microsoft, Apple, because
Microsoft after this.
No. I want to get to the actual to what we actually wanted to talk about.
Okay.
Yeah. So we could do Microsoft, down the line, or even next quarter when we have earnings again for them. That's fine.
Well, I meant oh wait, but you have to paste it. I keep forgetting.
I do have to paste it. Yeah.
All right. Yeah. Sorry.
No, it's fine. It's fine. So what do you think about this graph when it comes to the shares outstanding?
You kind of know what you're getting.
It's flat, slightly coming down though.
Yeah, you know what you're getting.
Yeah. So what do you think?
It's not as good as like other companies, but it's not bad.
Well, you have no retrospect though. You have no reference.
Yeah. Okay, so the 5-year is like it's like the 5-year, right? So
the 5-year is essentially, it is coming down. They did increase it a little bit during. Actually, no, they kept it flat during COVID. Look at that.
Yep.
11912, 11992, and 11982. So they actually kept it flat. So I actually do like this. Even in 8, 7, and 6 years ago when they were having problems, they didn't increase it either. Look at that. That's actually really good. They increased it one time from 9 to 8 years ago, kept it flat, brought it down, kept it flat, brought it down. So that's very interesting right there.
Yep.
So what do you think?
Essentially, I would say 85%.
Yeah, I was gonna give them a high grade too, because I actually do like that a lot. I'm actually gonna give them a 90.
You know what you're getting. You're not surprised.
And lastly, cash and equivalents. Wow, this is nutty. This is the first time I'm covering this. This is crazy. Shout out to the 28 of you watching. We're gonna get to the taxes and how to pay zero taxes legally in just a few minutes. All right, guys. So please bear with us. Remember, we do have to stream for 2 hours, and we didn't want to talk about taxes for 2 hours. So
unless you're really excited about taxes.
I mean, I am.
Yes,
I am. Because I'm gonna show you guys something crazy. I have a calculator set up and everything for it. Anyways, on the cash and equivalents, they currently hold $9.6 billion, and I don't think this average. Oh no, this average is correct. And this average of $7.5 billion in the 10-year. Overall grade, 61% for me, 61% for you.
That's ironic because we rarely get the same grade.
Yeah, I think the main issue with this, guys, is that it's cyclical. Right, that's the problem. It's the cyclicality of it, and now you're also dependent on whether or not they put out a good product. Because unlike Apple, right, that even if they do put out a garbage product, which they're all garbage products in my personal opinion. People aren't going to go away from the iPhone, right? People who are cemented with the iPhone, they ain't going to go away. But Nintendo, it's like, all right, well, I guess I'll just play Xbox, right? So
it doesn't have, like, comparing Apple, like Apple's a really good example. It doesn't have its own ecosystem.
Exactly. Well, it does, but it's mostly for like family gaming, right?
Yeah, but you can kind of get that from other consoles. It's not exclusive to it, whereas Apple's OS is exclusive to Apple.
I agree.
The Mac OS, the Apple OS, iPad, all of them share that like architecture.
I agree. Just like Samsung shares the Google architecture too. So that's the way that I feel about it. I don't know if you feel any different, Mike, before we move on.
I'm curious what the rest says.
Okay, so here, guys, we're going to take a look at the discounted free cash flow to see what in the world this thing says. Now, I also changed this up a little bit as well to make it a little bit easier for the one that always makes the assumptions. And here you have it. So what do you think about this new look?
I like the I like the 2 bars at the top.
Yeah.
Where I don't have to keep guessing.
Yeah. So I gave you guys. So here's the thing, right? We can't use Seeking Alpha for this anymore.
Sorry, I was reading a comment out from Robin Her. I kind of blanked out for a second.
We'll take a look at that afterwards. We can't use Seeking Alpha anymore.
Why?
Because Seeking Alpha's forward revenue is for only 2 years.
Oh, well, we can we can basically you can use the 5-year to kind of project what if it's like where it kind of is, and then like you can make an assumption of like, are you going to continue what the 10-year was or not?
So do you think it'd be better if I split this up and also put in the 5-year growth as well? Like get the 5-year, get the 5-year. Okay,
it'd be more representative of what the current inclination is, the longer term trend, and then the Seeking Alpha is like the short term.
I could add that. No, well, Seeking Alpha is for the 2-year, but what I'm saying is I could just put in the 5-year growth here on the calculator. I could just put it like a line under. You get me? Yep. So I could add that too. Yeah, I could add that too. So I'll make sure to add that. But for now, we can't use Seeking Alpha anymore because 10-year growth. You could make the case Seeking Alpha 2-year to 5. That's not too much of a difference, but you can't do 2-year to 10. That's impossible.
Yeah.
So, okay, here you have it. 10-year growth. By the way, I can hear myself on the mic. 10-year growth of 117.23%, and the share buyback on the same time frame 1.65%. So, what do you think? Predicted share buyback for the next 10 years. This is for the next 10 years now. This is no longer 5. This is 10 years now.
So, projected share buyback, if they've been buyback 1.65%. So you can do a standard like buyback 2%, buyback.
Wait a minute. Do I have that wrong? Hang on a minute. 1 second. Sorry guys. Again, this is the first time I'm debuting this. This is actually figuring out yes, so they have been buying back. Yeah. Sorry. I'm just sorry. Again, I'm just trying to. This is the first time I'm seeing this. So yeah. All right. So yeah, they have been buying back at 1.65. So what? It's just the reason why that got me confused is because when we issue, we put a negative. So I'm looking at negative, and that's a little bit confusing. Make sense?
Yeah, that's fine. Doing 0, 1, and 2.
I should change that. Actually, let me just do this right now. Or no, not absolute, because if they are issuing, I want to be able to see that. So let me just put a negative in the front. There you go. So that means that they're buying back 1.65.
0, 1, and 2.
0, 1, and 2. All right. 0, 1, and and 2. Where did that 10 come from? And 2%. Okay. And now for the revenue. What do we got here?
So let's see. We're assuming 117% over 10 years. So the revenue was going down a little bit going into this year. So let's assume 80, 85, and 90.
80. Okay. 80. Oh, sorry. 80. Oh, wow. Okay. This is. Oh, okay. I'm trying to see some issues here. Okay. Interesting. All right. Well, good thing we're doing this now because clearly that's not correct. Clearly that's not correct. So I'm going to have to figure that out as to why that's not working. Interesting. Because that should not do that. So, all right. Well, never mind. I guess we're not doing that now, Mike.
All right.
Yeah. I think I might have to divide this by 10 as well on the, because the way that I have it is it's 1% over the next 10 years. You get me?
Yeah.
So what I do is I take every year, I take all the years and then divide it by 10. Whereas for the revenue, it's not being divided by 10. So that might be the problem there. So there you go. All right, I guess we can't do that right now. Definitely something to look at for tomorrow as well, because that cannot stay like that, especially when we do NVIDIA. But regardless, though, looking at the base case, though, if we just take away the shares outstanding and we can see that on the base case, we got $7.24 to target share to after debt of $22.75. Current price of $14.30. It's looking like a good buy right now, adjusting for debt. So there you guys have it. Again, sorry that didn't work out. I do have to fix that, though. So, yeah. All right. So, do you want to take a look at this on the dividend first, though? Yep. So, looking at this dividend,
I will be right back.
Dude, you're about to go on. Okay.
What? You're doing the taxes next, right?
Aren't you gonna take a look at Nintendo on the thing?
Oh, well, I can't because it's OTC, so I can't do volume.
All right, great. Awesome. Yep. Okay, guys, looking at this company from a dividend perspective, putting in $5,700. Actually, sorry, I did change this. Putting in $6,215 because that is the average U.S. income currently. Annual dividends of $152.12. So, again, you do have to pay double the taxes on this because it's a foreign company. All in all, though, Nintendo company, I really, really do like, and I really would like to buy in the future. So, yeah. All right, let's take a look at chat real quick. Shout out to the 28 of you watching. I think at one point you had 32. Shout out, guys. Shout out. So, let's see. Next says, if you start playing Switch games online, I'll stream with you. I have no plans on... Yeah, we have no plans on gaming stream, guys. Again, there's a lot of that on Rumble already. We don't want to saturate... we want to do something different. Yeah. Plus, my wife is the one that's doing that mainly, and she likes playing like cozy games like Stardew, Sims. So we do have plans in the future to maybe incorporate games of into the channel eventually, but that won't be for a while. Let's see. I would never do that, but are you ready for the upcoming correction? Getting ready to hit. I've been saying that for several years, my dude. I don't know if it's gonna happen. Are you guys going to be betting on Option Casino this Wednesday? You mean Nvidia? You mean Nvidia, my dude? Cause Nvidia is quite an interesting one. We'll see. I'm betting it's going to go down because of profit taking. You think so? You think people are just going to start taking profits on Nvidia? But there is room for it to go up if that helps you. LOL. I mean, I don't know. How much room is there to go up? Infinite? I'm not really sure, right? Yes, a little nervous about that. Yeah, kind of nervous. If I bet on it, am I betting to go down? I don't know. It really is up to you. We have no idea what's going to happen, honestly. We really have no idea what's going to happen, especially on Wednesday. Wednesday's going to be bonkers, right? Wednesday's absolutely going to be bonkers. So, guys, I don't know if Mike is back yet, but I guess now it's time to get into the meat and potatoes of the video. And yes, I did specifically leave it for last because, I don't know how long we're going to be on this, right? I don't know how long we're going to be on this topic, but it should be fun. I really wish Mike were back, though. I really wish Mike was back. So, guys, let's talk about the main thing as to why I made this channel to begin with. And that is the fact that I don't like paying taxes. I don't know anybody that likes paying taxes. Taxes are awful. In fact, I'll say it right here. Taxation is theft, period, end of story. If you disagree with me, you're wrong. So when it comes to taxes, guys, I don't know anybody that actually likes paying taxes. Now, I get the whole thing of like, oh, but you should pay into the system because you're getting... Who's going to build the roads? Yeah, well, my solution to that is privatize it. That's just me. I don't like the government taking my money because I don't have a say as to where that money actually goes. So, sure, it could go into building roads, or it could go to bombing kids in the Middle East. And I'm not dealing with the other one. Unfortunately, in my time, we've gotten more of the latter than the former. In fact, actually, right now, there's worse things happening right now that's really starting to annoy a lot of people. So, one of my main things is, how in the world am I able to pay as little tax as possible while still not breaking the law, right? A lot of people do it. We know Warren Buffett does it. Trump obviously does it. He's been called tax evader for like years now, even though he does it legally. It's part of the law that is in the books that the system themselves made it. So I wanted to figure out a way, hey, how in the world is this possible? How in the world are people actually doing this? Because if it wasn't profitable, people wouldn't do it. So that had me thinking, all right, what in the world is the tax brackets, right? How many people actually know what the tax brackets are? Because a lot of people don't. So if we take a look at this, guys, we're going to take a look at we can actually take a look at the 2024 tax brackets, because this right here is huge. Now, we're not going to take a look at the 2023 ones, since it already passed. But looking at the 2024 tax brackets, this is absolutely insane. For starters, you pay 10% if you make $0 and you're single. All right, that right there, really? Are you kidding me right now? Married, if you're filing jointly, 0 to the first $23,200, you pay 0. Okay?
I'm back.
Okay, great, you're back. So we're just starting on the tax brackets for 2024. And the reason, and I basically explained as to the reason why I started the channel is because I wanted to figure out a way, or the reason why I started investing is because I wanted a way to not pay taxes legally. People do it. Trump does it. Warren Buffett does it. How are they doing it? So
Did you talk about Robinhood and Ghost's comments?
yes, I did. Yes, I did. Except for that last one on Ghost Walker. It's been bouncing off the 740 level. I'm pretty sure he's talking about NVIDIA. It's been bouncing off the 740 level, so I think it will be back on track to 700, then bounce back up after it hits that level a few times. So, yeah. Do we have anything to say to that before I go on?
With NVIDIA, like, I'm debating about playing it, but I'm not 100% sure just because I got to see what the contracts are sitting at.
Okay. So coming back over here, guys, this is the tax bracket for 2024, and this is for active income. I did forget to say that. This is for your regular 9-to-5 income. And, these are essentially where you land at. And looking at the 10% one, we got 0 to 11,600 if you're single. And then filing jointly, 23,000 is the max. That's 10%. You're really getting taxed 10% for having 0 income. Stupid. Okay. The next tax bracket is 12%, and let's only take a look at the married one. So 12% for $23,201 to $94,300. So you're already getting taxed right there, 12%. And then 22% for $94,301 to a whopping $201,050. All right. 24% for $201 to $384,000. 32 for 384 to 488, or sorry, 487. 35 for 487 to 731,000, and then 37 or more percent for $731,000 or more. So this is for your basic active income. That's a lot. Most people would fall right here. If you're filing married, you would fall between the 23,200 and the 94,300. All right. For those of you who are single that fall within this frame, 11,601 to 47,150. So that's a 12% tax right there. However, investing income, right? Investing income gets taxed at a much lower rate. How much lower, you ask? Well, this much lower. So dividends, guys, especially if they are qualified dividends, which we are going to get into the difference between these two. Qualified dividends get taxed at the long-term rate that you would get if you were to sell a long-term capital investment stock. Basically, if you hold a stock for a year, I think a year and a day. If you hold the stock for a year and a day, and then you sell it for a profit, you get long-term capital gains tax. Dividends, if they are qualified, they are counted as that long-term capital gains tax. And this is the insanity of having investment income and why it's so much more powerful than any active income. Looking at this, single, 0% tax rate from $0 to $47,025. Straight up. zero. So you pay zero in taxes for the first $47,025. Anything above that is 15% tax rate from, look at this, $47,026 to a whopping $519,000. Mike?
Yep.
Any comments on that?
Basically, if you were to be making that in the standard tax bracket, you'd be
Let's go
paying
back to that.
upwards of 35% probably.
So if you go back to that, you are paying 35%. Yep.
Yep.
So in the normal tax bracket, when you're getting up to work in the morning, working for somebody else, 9 to 5, you are paying a whopping 35%. Whereas for the highest level, right? For the highest level, when it comes to dividend income, you're paying 15%. So more than half. You pay more than half of what you were for dividend income. That's the first thing. Now, where it gets really crazy is the married filing jointly. To the first $94,050, you pay zero. Think about that. You could be making above average salary right now on dividends alone, right? And by the way, this is, again, qualified dividends. And you're paying zero taxes. Thoughts?
Insane. And also why people like, I think if more people knew about this, about dividends, they would be more into dividend investing versus the hype and kind of like what the mainstream talks about is the, like, buy this stock, hold it, go up, sell it, right? Like,
Yep.
and pay the 35% capital gains tax on it.
Short term. Yep. Short term.
Yep.
So this is absolute insanity, because if we take a look at the other one, right, for the normal active income one, 90 to the first 90,000, or to the same roughly tax bracket, you pay 12%. Now, granted, 12% isn't that much, but you could be making if you guys were making $90,000 a year, would you rather pay 12% on it or 0% on it? Just saying, because I could survive off of $90,000. I can. I'm surviving off of less than $90,000 right now with my active income paying 12%. Whereas in this case, you have $90,000 and getting taxed at 0%.
Half the taxes, or no, yes.
Well,
half
this
the,
is go on.
You'd be paying a quarter of your taxes essentially.
Correct. And this is strictly, guys, for federal income taxes, all right? This is solely for federal income taxes. When I say pay zero in taxes, I mean income tax. Every other tax is essentially whatever, except for property tax. I'm not really a fan of property tax. I think it's stupid. The fact that you could buy your own house, and then if you don't pay a property tax, the government still takes it from you, so you never owned it to begin with. That's basically all that's telling me. But when it comes to income tax, this is my biggest issue ever. There shouldn't be an income tax, period. So right then and there, this saves you guys so much money. Now, on top of the fact that this is saving you a ton of money, it also gives you a lot of freedom too, because this dividend income is coming in whether you're sleeping or not, right? Whether you're on vacation or whether you're not on vacation. So you could be raising chickens and this dividend is still coming in. So it gives you the ability to pretty much do whatever you want, whenever you want, and it allows you to travel if you want to, or even move anywhere in the world, right? You can move anywhere in the world. There's actually a few people that make less than $94,000. They make roughly like $40,000, and they live in the Philippines because it's the standard of living is less, right? The standard of living is less, so their US dollars buys them more, and they're essentially living tax-free. Well, not tax-free, but they're essentially living without having to work. And their only income is just dividends, right? The only income is just dividends. Now, there are risks when it comes to this. Companies can cut, right? Companies can cut, just like how we saw right here in the first article that we covered. This is why I covered this one first. Companies can cut their dividends. So that's why I'm always hammering about, hey, can the company cover their dividends with the cash flow? So this is just one example as to how, at least my favorite example, as the best way to pay zero taxes. Now, a lot of people say, but dividends are tax inefficient. Well, so I need to clarify something here. Taxes are still being paid on this. Okay? Taxes are still being paid on this. Mike, by the way, if you don't understand something, just Tell me.
No, no, I'm listening. I'm also looking at news that's coming out.
Okay. So taxes are still being paid on this. However, the amount of taxes being paid on this is a lot less than what than your normal active income. For starters, yes, the company that pays out this dividend does pay taxes on this dividend. A lot of people say that the dividend gets taxed twice because the company taxes it, the company gets taxed from paying it, and you also get taxed on it. But right here, I just proved that you really don't. I'm sorry, but if you are married and you make $94,049 and you can't live off of $94,049, I'm sorry, I can't help you with this. Like I really, really can't, right? That's a
You even at that point, like you're like, I wouldn't even say that, right? Where like the not looking at the zero, but looking at like the 15%. If you can't make like, let's say like you make a household income 150K, 200K, right? I'm just throwing a number out there.
okay.
If you can't make it off the 94, it's zero. And then from the 94 to 150 to 200, so double essentially, is only 15%. The effective tax rate's 7% versus your effective tax rate in most federal jobs and standard jobs of the same caliber
Yep.
would be closer to 30%.
Right. Well, 22.
Oh yeah, 22. Well, yeah, so the effective tax, yes, sorry.
So, yeah, sure. But the reason why I specifically am looking at right here is because I'm trying to avoid paying taxes. You get me? Because taxes, dividends do get taxed, right? When a company issues a dividend, they do get taxed. The company does have to pay taxes on that dividend. So the best way to mitigate as many taxes as possible, right? Because that's the whole point, is to pay as little tax as possible, is for you to fall between this frame right here. You get me? And that's why I'm saying $94,000, even $90,000. That's still a lot of money. Most people aren't making that right now. You get me? Most people aren't making that right now. So $94,000 tax free essentially. That's amazing. It's insanely amazing. So that's why, yes, when people say, oh, dividends are tax inefficient because you get taxed twice, well, I then have to argue the fact that when you work at a job, when the company pays you, the company pays taxes on that, you pay taxes on that, there's payroll taxes all over that, there's healthcare insurance, there's just a ton of stuff. Right, you get taxed on
You
your
get bent over backwards regardless.
yeah on payroll day. You get taxed 10 times more than what you get taxed at if you just receive the dividend from the company. Now, granted, this isn't taking into account the fact that you have to buy healthcare, right? Because if you're not working, you ain't getting healthcare, so you have to buy your own healthcare, which adds on to it, and healthcare is expensive. But that's beside the point, right? If you're getting $94,000 cash, pure cash, and is getting taxed at 0%, I think you can make out with pretty good, decent healthcare. That's just me. I don't necessarily know, but I personally have that opinion. Am I wrong to say that?
Depends, right? So, what do you define as good healthcare?
Obviously,
Because
everybody's different.
If you look at some of these plans that they offer, independent outside company healthcare is really, really rough. And it's expensive. So there's a give and a take, right? So, but the thing is, at that point, someone that's making 94,000 in dividends has other things going on.
Right.
You have investment properties, you have diversified portfolio. You're not just in dividend companies. You're not exposing yourself to that amount of risk.
Right. But let's just assume dividends, right? Because it is the simplest. It is the simplest, and it is the most, I guess, easiest for people to get into. It's really hard for people to get into like real estate. You feel?
Fair enough.
But this is just one way, guys. At least my favorite way, and my goal to pay as little taxes as possible. Again, there's a lot of, and also, again, this has a lot of freedom. You can move wherever you want in the world and on the planet. There are people that retire with $50,000 in dividends coming in. They move to Portugal, and then they live off of their dividends. So it gives you a lot of freedom, and it gives you a lot of just room to do whatever you want. Now, this is just federal taxes. What about state taxes, right? Because state taxes is another monster. Well, there's a solution for this too.
Oh, here we go.
And that is, Mike.
Your favorite state.
Well, there's 9 of them. There's 9 of them. And
all right, I'll rephrase his several favorite states.
no. There's the perfect state. There is the compromise state, and there is the
Runner-up.
The runner-up state. Yeah, sure. So my favorite state. Well, first of all, if you're lucky enough, guys, to live in one of those states that are gray, you are now paying 0 state income tax, which dividends are counted as income. So not only are you paying 0 for the federal one, right? For the federal one, you're also paying 0 for the state level, which means in general, you're paying 0 in income taxes. Again, this doesn't include sales tax, but then again, how often are you going to buy a new TV? So sales tax is honestly, to all taxation is theft. I agree with that. However, if I were to have if I were to have just one tax, give me the sales tax, make it like 20% for all I care, because then at that point I can control my taxation. That's just the way that I see it. But if you're lucky enough, guys, to live in one of these states, actually it was updated. This has been updated. So if you happen to live in Alaska, which I know we had somebody on YouTube who lived in Alaska, AK Willie. I don't know if he's watching here, but if you are, congratulations, you pay 0 state income tax. Alaska, Nevada, Texas, South Dakota, Tennessee, and Florida. And my favorite, Wyoming. These states don't tax you on income. Meaning, if you have the ability to live in one of them, congratulations. If you make that kind of dividend income, $90,000, and you live in one of those states, you pay 0 in income tax when it comes to the federal government and 0 when it comes to the state government. Now, I'll add on to this as well. If you're making $90,000 in dividends, you could probably afford to move to one of these states. Yes or no, Mike?
Yeah, very, very likely.
Yeah, I personally would. And that's the reason why, hopefully, if the good Lord allows it, it's his will, not mine. If the good Lord allows it, I want to move right here to Tennessee because Mike lives right here. Unfortunately, Mike, I'm not moving to South Carolina. No way. Not with a 7% tax rate. Not going to happen, buddy.
Dang.
Not going to happen. Nope. I refuse. So,
what's Georgia's?
5.75.
Yeah, but they tax you out the butt on everything else.
Well, okay. Yeah, that's fair.
I like to have to look at like total tax burden per state.
This is the actually sure, but well, Tennessee. Actually, we could take a look at that right now. Let's pull that up because I have looked at that before in the past. See, this is why I wanted to do other stuff. So to do other stuff before talking about this. So let's take a look at this. So total tax burden, burden by state. Okay. Do we have a map? All right. Yes, we do have a map. Here we go. So, Tennessee is number 3. Tennessee's number 3. Wyoming is number 2. There's a reason why I picked my states, dude. I know what I'm talking about. South Carolina is number 9. See, this is what I'm telling you. Trash. Garbo.
Okay, so what would you define as like number 26 or 46?
I'm dumping it into a black hole. I don't want to see it.
That doesn't de-atomize, does not exist.
Yeah, completely. Energy can't be created or destroyed except in the black hole. So boom, out of here. Bye-bye. Completely delete it at the nuclear
Atomic level.
The atomic level. There you go.
I love how I was agreeing on my trade for like 5 minutes and then literally market's like,
nope,
right back to red.
So basically, if you have again, this is the reason why I love Wyoming, right? That's my number 1 state. When it comes to the total tax burdens in Wyoming, number 2, right? Number 2. And also, honestly, there's like no one there, so it's great. I love it. Tennessee is number 3, which is the compromise. My wife likes Florida, but I don't want to deal with hurricanes. I've dealt with enough hurricanes in Cuba. I don't want to deal with that nonsense. I'd rather do Tennessee. And Tennessee happens to be number 3. So there you have it. And hopefully we'll be able to set up shop right here in North Carolina. basically halfway between me and you. So that's the future plan, but that's the reason why I like Tennessee. And again, guys, if you happen to live in any one of these 9 states, congratulations, you're paying 0 in taxes when it comes to dividends. We're not done with this yet, though, Mike. Are you ready?
All right.
So I'm about to bring up, guys, something that blew my mind when I found out about it. So assuming that you have made it this far, in the sense of like you made $90,000, you live in a state, actually, yeah, and you live in a state that doesn't tax you at all. Well, actually, let me. I was gonna move on to this, but I want to cover one more thing. And this is to people who are saying, well, how much money do you need to make $90,000 in dividends a year? Because that's a big question, right? All right, and Mike left the house.
No, I'm here. I'm listening.
So, okay, how
So
much?
it's probably like what, $1 million?
So
No.
it depends. So how much money do you need to make $90,000 in dividends? It depends on what your yield is. It depends on
If
what
you
your yield
assume
is.
like a 5% yield, right? Like just
Nah,
talking.
no way, dude. No way. I'm not even gonna do that. I'm gonna say around 4%.
All right.
And the reason why I'm saying 4% is because my yield on cost, which I have calculated here, my yield on cost for the entire for my entire portfolio, it is currently at
4.19.
4.2, almost at 420. So 4.19%. So I'm going to say 4%, right? One of my biggest goals was to get a 4% by the end of 2023. So I did manage to do that. So yeah. So with a yield of around 4%, right? With a yield of around 4%, and let's just say how much do you want to make? 90,000?
Yeah.
Yep. So basically what you got to do is you take 90,000, you divide it by 4%, 0.04. And this gets you, now, guys, I'm going to preface something. You're going to see a big number. You're going to see a huge, bigly number here. All right? So don't get scared. But you would need to invest $2.25 million.
And that's your portfolio value. That's not necessarily, guys, the what you would have to invest.
No, this is what you would have to invest. This is not your portfolio value. This is not capital gains. This is money invested, right? Because your yield on cost is based off of your your investments, not the capital gains investments.
Gotcha.
So yeah, granted, this isn't taking into account any increases, right, that companies may do. But you would need to invest $2.25 million with a 4% yield, which is a big yield, right? If your bank told you that for your savings account, you're getting a 4% yield, you would be ecstatic. So just think of it like that. 4% yield, which is huge. You would need to have invested $2.25 million. Now, for all of those of you who just completely tuned out of here, well, hear me out. I never said this was going to be easy. Let's just keep it.
You never prefaced that.
Yeah, let's just keep it 1,000, right? Let's just keep it 1,000 here. I never said this was going to be easy, but the rewards for it is incredible. So I look at this and I see this. Most people make more than $2 million in their lifetime, right? The issue is most people, most Americans, they take their paycheck and they buy Gucci bags with it. They buy Louis Vuitton. They buy the new phone.
That's stupid shit.
Yeah, they buy the new car, right? They buy the new Apple phone. What I suggest, and this is what I really want to, I won't even say push, but what I promote, and it's really difficult too. Oh my goodness. I've tried to get, people have found interest in dividend investing. They do it for like 2 months. They realize that it's going to take forever and then they quit. I'm like, man, this is very similar.
Because they want instant gratification.
I'm like, this is very similar to working out. You work out, somebody wants to lose weight, they work out for a month and then they quit because they don't see any progress. It's like, dude, you gotta work out for like 3 years, my dude.
Not sidetracking real quick, but if you guys work out, have you noticed that 90% of the people that did their New Year's resolution are gone now?
Yeah, it usually happens that way.
It's sad.
It is sad. It is sad because a lot more people would be a lot healthier if they just stop making excuses. I get that there's life, but I have a life too, Do
when I hear that, I just want to like ream them for it. I'm like, okay, so I have a crazy job that I work 50 hours a week. I work out 6 days a week and do this and take care of a house
right,
and have a bunch of other stuff that I got to do. I'm like,
right.
you like one of the things that someone told me, it's like time out. Do you understand that you're only sleeping for 8 hours a day? That means that there is 16 hours during the day that you can be doing stuff.
Well, yeah, but that's also
You
not taking into account, driving from place to place. That's not taking into
Yes, but
account.
okay, so but someone also told me like, okay, so start tracking what you do.
That's
Start
true.
how much time you spending on your phone doing stupid
It's
stuff.
true. That's 100% true. Watching
If you
Netflix.
actually
Watching
well,
Netflix. Yeah.
here's the thing. If you have an Android or Apple, I believe you can do this too. You can actually see what your app usage is for screen time.
Yep.
And then you can literally manage your life around what are you looking at and what are you spending your screen time on. And it's quite fascinating what it is.
Just think about it. Just think about it. Not only, for example, if you and I'm not telling anybody off if like they have a Netflix or Disney Plus account. You guys do whatever you want. All I'm saying is when it comes to actually changing your life, you're gonna have to be proactive at it, right? Just like how if you were, Mike, you know this from me. I used to be very obese, right?
Yep.
I used to be very obese, guys. I'm 5'10", and when I was 21 years old, that was 7 years ago. Oh my goodness, 7 years ago. I used to weigh 230 pounds. My waist size was almost 42, and I'm 5'10". I was obese. It got to the point where I couldn't walk half a block without. Mike, remember this? My feet are hurting.
I remember.
Yeah, I
And
couldn't
then
even do that.
also you couldn't bend down because you had a bad back.
Yep. And there is a lot of stuff that happened in between there, but I got to the point where you told me, dude, you're 21 years old. What are you doing? What are you doing? You should not. Your back should not be hurting. Your feet should not be hurting. Do something about it. I did, and I slimmed down from 230 roughly to 155, 150 to 155, and then maintained that for the past 6 years. Did that involve sacrifice? Yes, it did. Yes, it did. But it became my life. So I look at this. Also, we are dropping frames. That is not good. Okay. We're back. We dropped frames a little bit, but we're back. So, guys, you have to make sacrifices. I get that we all have a life. I want to spend time with my wife. Like, you want to spend time with your family. You have a house to take care of. There's a bunch of stuff that life does get in the way, but that's not really an excuse. And to those of you who have kids, what I say is, I don't have kids. I would like to have kids, but I would use my kids not as an excuse to not better myself, but to better myself. You get me? You get me?
No, I fully agree.
Like people, and then again, if you guys say this, I highly suggest you think that mentality because you want to have the mindset, you want to have the positive, non-nihilistic mindset. Have the mindset of, okay, how do I better myself so that way my kids can have a better life than I did? Right? That means sacrificing. That means not having the Netflix account that costs $10. Put that $10 to something else, and then because you're not spending time watching Netflix, you could be spending time somewhere else.
You could be spending it at the gym.
You could be spending it at the gym, learning whatever it may be. Right? You could be learning about this. You could be whatever. So. $2.25 million, guys, is a lot. However, when in retrospect, it really isn't. Right? It really isn't. If you play your cards right, even if you're dealt a bad hand, you can still make it. You can still make it if you play your cards right. In poker, it's not who has the best hands, it's who has the best poker face.
Yeah, it kind of is.
It really just comes down to that. You can have the worst hand and still win hugely, bigly. So that's just the way that I see it. Now, it actually gets worse if we use the S&P 500, the S&P 500 yield, Mike. I think the S&P 500 is like 2%. But
really?
Yeah, I think the S&P 500 is like a lot less. Let me actually look that up really quickly. Let me look up SPY. And let's take a look at this. Sorry, 1.33. Whew. Actually, let's look up VOO instead. VOO. just because it's the same thing, but the oh my goodness, what was the thing called? The thing that manages the ETFs. I forgot what it was called.
Spider?
The what?
Spider?
No.
Vanguard?
No. Expenses mainly. The expense ratio.
Rate?
The expense ratio. That's what it was. Yeah. The expense ratio. The expense ratio for VOO is a lot less than the Spider one. So it's 1.38. Basically, if we do the same math, around $90,000, right? So we divide that by 1.38, we get. Sorry, wrong one. Sorry. $90,000 divided by 0.0138. There we go. That is $6.5 million. So this is why my New Year's resolution. Well, one of my 2023 goals was to have a 4% yield, because $2 million is pretty average, right? It's pretty average for people to actually get. But let's assume, guys, that you have accomplished all of this. You make $90,000. You still have to report this income, right? You still have to report this income to the feds. So, Mike, I'm going to need your help with this one.
Yep.
Let's take a look at what your income tax return would be if you make dividends, qualified dividends, and if you are, have so many dependents. Are you ready for this? This is going to be fun.
All right.
So, let's start off. Which one do you want? Single, married, filing jointly?
Do single.
Let's do single first? Okay. By the way, guys, this is for can I get it here? I think this is for 2024. Yes. So the 2024 tax values used in the 1040 ES estimation. So yeah, this is for 2024, guys. So single. How many dependents? Basically, how many kids? We could always change it later.
Let's say 2 kids.
Let's say 2 kids, okay, from the age of 0 to 16, because at this point of the game, like, seriously. All right, so 2024, return filing in 2025, okay? Now, when it comes to wages, let's say you make 0, right? 0 for pretty much everything, because you have full-blown dividends. Now, let's just say that you have 0 interest income, meaning that for your brokerage, I should really zoom this in, actually, just for you guys to see. There we go, much better. So let's assume that you have 0 interest income. You're pulling all that money out as it comes. Now, for ordinary dividends, I didn't go over this because I didn't really find it that important. Basically, dividends is divided into 2, qualified and non-qualified. The non-qualified comes from mainly REITs and ETFs, that the dividend mainly comes from REITs. So basically, this dividend gets taxed at the normal tax bracket that your average that your active income actually gets you. Okay? Mm-hmm. So usually portfolios have a mix of 2, unless you have all REIT companies in your Roth IRA, which get taxed at 0, which is crazy. But let's actually input some ordinary dividends. Assuming that we want $90,000, Mike, total, majority of them being qualified, what do you want this to be?
Let's see.
Like 60K qualified?
Yeah, because you're never going to get like 100% of it.
No. So 60K qualified dividends, basically companies like your Apples, your Microsoft, your Chevrons, your Visas. And then ordinary dividends, the ones that come from REITs, will be the difference of 30,000, right?
Yep.
Is that 30,000? Yeah. So nothing else inputted, guys. Absolutely nothing else inputted. No self-employment, nothing. You are living solely off your dividends. $30,000 of dividends coming from REITs, and non-qualified dividends that get taxed fully, and $60,000 that have the tax benefit. Meaning this right here gets taxed at, this right here gets taxed at 0. This right here gets taxed at, it's based off of your total. So $90,000, let's see. So $90,000 gets you taxed at 12%. So that $30,000, this right here, this $30,000, because the total's 90, this 30 gets taxed at 12%. This right here gets taxed at 0. Okay? So, with 2 kids, single, let's see how much money your tax returns would be. So, you would actually owe, right? Which makes sense. You're filing single, right? With 2 kids. Yep. So, you would owe around $1,854 in this case.
Yeah.
So, you can see right here, everything itemized. Taxable income, blah, 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 et cetera, et cetera, et cetera. So let's change this up. You want to change this to married filing jointly?
Yeah.
All right, this is where it's going to get crazy. Are you ready for this? This is going to get nuts right here. Ready?
Yeah.
So
Just 1 second. I'm trying to do something with a trade real quick.
no problem, no problem. So basically, guys, you're not working. All your money you're getting all your money through companies, other people working for you. Take a look at what happens here. $4,000. You are getting paid $4,000 to essentially have sex. That's literally what that says right there. To not work and to just procreate, have 2 kids, you are getting paid $4,000 by the government.
Yep.
What? Bro, I found this out. I lost everything. What? What do you mean? What do you mean that by not working and having kids, 2 kids only, you are getting paid $4,000? Can you believe that?
Insane.
Dude, I don't even get paid back to $4,000. This is crazy. So for not working, that is absolutely insane, guys. That's absolutely insane. So do we want to change these numbers up a bit?
Sure.
All right. What do we want to change? You want to add kids?
Yeah. So let's say if you had 4 kids.
4 kids. All right. Are we changing the overall total dividends or no?
Let's say you. Let's say you do. I don't know.
So if we're still filing jointly, not me and you, but I'm just saying, if we're still filing jointly here, anything above 94,000, you are paying 15%. So on top of the normal, like if you want to keep the non-qualified dividends the same and increase the qualified dividends, you're not going to pay 15%. So would you like to put like 500,000 total?
Yeah.
Like something crazy that still lands you right here in the 50% tax rate?
Let's say 250,000.
So 250,000 in qualified dividends, or
Yep.
250,000 total.
Or do like 125 and then 75 of ordinary.
Okay, so 75 of ordinary. So 75,000. I think that's 75,000. Yep. And then what was the qualified one?
Qualified being 75K.
75K. No. Qualified.
Oh, qualified, sorry, 125.
125. So that's 125, 123. All right. So what is that total? I can't do math. What is that? 300,000? No, 200,000.
250,000.
Yes, 250,000.
No, it's 200,000.
It's 200,000, my dude. It's $200,000. So this would land you essentially right in between right here. So now for this 125,000, you are paying that 15%. And because the total is 200,000, now for the normal one, you are at 22%. Okay, for the ordinary dividends. Now, we did increase the kids to 4. Do you want to change that back to 2 to see how that fares and then switch back to 4?
Sure.
All right, so let's change it to 2. And then let's see how much this would alter it. So let's hit calculate. And now you would owe $14,247.
That's like nothing.
For the year?
Yeah.
I mean, you're making 200 grand. You're absolutely right. That's absolutely nothing, right?
Yeah, go make 200 grand now. See how much you pay.
Yeah, pretty much, right? Pretty much.
Now, if you own a house, literally, you can any interest you pay on the debt of the house is gonna wipe that out.
Well, we do have this down here.
Okay. So mortgage interest on a standard house, like if you have 4 kids, you're looking at
this is
easily
2 kids.
20 grand.
Okay, so you're able to put down here 20 grand for this is 2 kids though.
Or any amount of kids.
Right,
so you're gonna be paying 20 grand
a year.
Yep.
Dear Lord. All right. Is that 20 grand? Yeah, that's 20 grand. All right. So making 200,000, 2 kids, filing jointly, and your mortgage interest of $20,000.
Real estate tax. You're probably
Wait,
looking
wait. This
at.
is mortgage interest, so this is what you get for your house.
No, that's what you're paying.
Okay.
Real estate tax. Let's say 3 grand, 4 grand.
Okay, 3 grand. Anything else?
Uh, uh, that's it.
All right. So doing this, nothing changes.
Really?
Yeah.
Okay.
Yeah. I just hit calculate, and literally nothing changes.
Oh, let's see.
But
Go up.
yeah, what's up?
Total tax.
I mean, it did it. I don't know.
Yeah, I'm just curious why it didn't.
Yeah. I could just refresh it, but this will go away. But let's change this to 4, and then let's see if this actually changes up a bit. So if you hit calculate, there you go, $10,000 now.
That's interesting.
Yeah. But the main thing that I really wanted to point out here, guys, is the fact that, if this is why I want to stay in that 0% tax bracket. You get me? I'm going to stay in that 0% tax bracket with as little ordinary dividends or non-qualified dividends as possible, because you could just see how much it is, like, a difference. Is that 60,000? Yes, it is. You can just see how much that is in difference. Look at that, $8,000. With keeping the real estate tax and the mortgage interest rates, putting in 4 kids, even if you have 3 kids, let's just put 3 kids. You're getting paid. The government is literally paying you to not work and to procreate. So there you guys have it. That's really the main gist of everything that we wanted to talk about today, especially this last one, guys. Because I know there's a lot of stuff going on right now, especially with, things at the border and that kind of stuff. And a lot of people are getting really upset that their tax dollars are getting taken away from them. Well, this is one way that you can evade that, right? I wouldn't say it's not evading. It's literally using the system to your advantage, right? It's literally using the system to your advantage. So I get that it's a lot. But $90,000, $2.25 million invested to essentially live worry-free, where you can live wherever you want, do whatever you want, not having to be susceptible to any outside circumstances. A lot of people were scared during COVID that they were going to lose their job. Well, if you had this, you know who didn't lose their job, or which businesses didn't go out? The ones that were being funded by the government, i.e. Walmart, which, by the way, pays out a dividend.
Yeah. Essentially.
I look at my tax dollars being taken away and being used to fund weapons. I can look at that and say, well, I don't approve of that. Or I could take a look at that and say, you know what? My tax dollars are being taken away and given to Lockheed Martin and Raytheon. May as well buy Raytheon and Lockheed Martin to get some of that money back.
Yep.
That's just the way that I see it. That's why I don't begrudge anybody who says, who invests in whatever company, even Monsanto, right? Whatever. At the end of the day, there is no such thing as moral investing. It really is just up to you, up to where your moral line is. So, yeah. That pretty much does it, guys. Let's talk about chat really quick. There really isn't that many comments aside from, let's see, Ghostwalker saying, after the whole 700 bounce, he said, you slave driver 16 hours a day. Yeah. Yeah, pretty much. You get what he's saying or no?
Yeah.
No?
No. Well,
Here, let me.
you gotta work hard.
Well, no. Yeah. Okay, yeah. That's basically what he's saying. I don't know. What can I have up that we could just take a look at while we're just talking here? All right. That's pretty good. Let's take a look at futures. So futures are down 0.31% right now.
Yeah, they raped me on my trade.
You had to say that word. This is going on YouTube, right? All right. Eat a carrot. I have a 4-legged kid. I don't know if that's a joke, but I'm gonna take it verbatim. And all right. Sorry to hear. Hopefully he's doing good. So, all right. So guys, are we okay? Okay, yeah. All right, guys. So yeah, unless anybody has any other comments on the chat, we're almost about to end this. We made it exactly 2 hours. Yep. We're a few seconds away from hitting 2 hours. So, Oh, it's a joke. Okay, got it, Ghostwalker. That didn't translate, man. That didn't translate. That didn't translate. Great stream, by the way. I have a dog.
Wait.
Got you. What was that?
No, I was just listening to what you were saying.
All right. But yeah, guys, what a great stream today. Seriously. I do have to fix that calculator though. I do have to fix that calculator. I'm gonna do it with Apple and Microsoft, the ones that actually I know work, and see how that turns out. Because, I'm not really sure about the about Nintendo. I'm gonna have to fix it with one I know for a fact. You get me? So I'll have that up by tomorrow though. Have that by tomorrow. So yeah. Yeah, cool. So we made it to 2 hours. Shout out to everybody who watched. At one point, I think we have to 32, 35 people watching. We're now ending it with 22 people, guys. Again, thank you so much. Thank you so much. Again, this is for the Rumble exclusive. So, yeah. Great. Hopefully, y'all learned something. Hopefully, we have inspired somebody here that watched that. Hey, you know what? Maybe dividend investing is something I could do. It's going to take a long time, but maybe something that maybe I won't live off of my dividends, but maybe my kids will, right? Because you can also set up a custodial account for your kids and just set it up for your kids. You get me? That's also something you could do. They have a lot more time than you, technically, by basic laws of nature here. But,
Yep.
All right. Did we make it to the 2 hours? I think we did. We're at 2 hours and 38 seconds, if I'm not mistaken. So I just want to go for a little bit more just to make sure we're fully in the 2 hours, in the 2 hour mark. So, I should actually pull up the next week's earnings. Or not next week, tomorrow's earnings. Let's pull that up just so that way we can talk about what in the world we're gonna do next time. So let me pull that up. Let's see. This is not for this. Hang on a minute. I need to bookmark the new one. Now here we go. Bookmark. All right. So guys, here are the earnings for this week. Tomorrow, Mike, we got Walmart, Home Depot, and Realty Income.
All right.
So you mainly want to do Walmart and Home Depot.
Pretty much.
Which, by the way, I have something to talk about Walmart and this logo over here. I'll save that for tomorrow.
All right.
Because I want to make people laugh. So there you go. Wednesday, Nvidia Day.
Yep.
That's really it. We're really only gonna talk about it. Maybe we'll get to Rivian. Maybe. But Nvidia's gonna be it, man. I highly doubt we're gonna get away from Nvidia in 2 hours. Thursday, we plan to do a mining only day. I'm gonna take a look at Newmont and Vale. So these two right here, right? And then Friday, Warner Bros. And then maybe any other ones in the past week that we didn't take a look at. Like, for example, Realty Income, right? For another one, Block, right? Moderna, something like that we could do. So, all right, guys. Shout out to the 27 of you guys watching. That's where we're ending it. And we've streamed for 2 hours and 3 minutes. Thank you all so much for watching. Make sure to like, subscribe, comment. Oh, actually, before I do that, I do want to promote. I do want to promote my second channel here on Rumble. I do have a second channel for those of you who do not know. And the reason why I'm promoting it is because, let me pull it up. I recently just put out a new music video. So yes, I do have another channel where I make music videos, usually AMVs, GMVs. I played this one actually on Friday, like the preview of it. But if you guys would like to just follow there, that'd be great. We gotta have more than just politics and gaming on Rumble. I have music right here. We do investing on this channel. We gotta have variety, right? Fair warning though, if you do want to check out these videos on my second channel, it's by the way called Fatal Plays. In fact, I'll put it in the chat if you guys would like to use it, right there. If you guys would like to see it, you guys can go there and check out these music videos. Fair warning, the further back you go, the worse they get. So yeah, you could definitely tell the spike in I guess skill, like right here, like right on this top line. So yeah, you guys can follow me there. just give you all more variety for Rumble. So there you guys have it. And yeah. With that said, guys, I don't know. Should we do a raid, Mike?
I don't know who's streaming.
Let's do a raid. Let's do a raid. I do like this guy. I follow him a lot. His name is Rance Gaming. He follows me. Him and I are cool. Let's do a raid, guys. Let's do a raid. So he's currently live streaming Tomb Raider from 1996. So the OG Tomb Raider. So yeah, I'm gonna put this guy on the stream or on the chat. And if you guys could stop by there and drop him a like, guys, tell him that Fatal Investing sent you guys. And yeah, that pretty much does it. Thank you so much for watching. Like, follow, and of course, comment, even on the VOD. Really appreciate it, guys. And make sure to follow us on X. Check out the other music video. Check out Rance Gaming Corner. He's great. Awesome dude. Freedom-loving Texas guy. Gotta love him. And with that said, guys, peace out. We'll see you all tomorrow, where we're going to cover, again, 7 p.m. Eastern Standard Time. We're going to cover Walmart, Home Depot, and maybe a third one. We'll see. So, with that said, peace out, and we'll see you all next time.